Meet Ray. He's an avid golfer and he was excited to get a job at a local golf course. He has one child, owns a home, and lucky for Ray, he's got a friend that works at that golf course. His friend has no kids, does not own a home, but he does go to college and have a student loan. Ray made $45,000 last year and his friend made $12,900. So we have these two different scenarios here, and we're going to try to calculate the taxes that were owed by both. So we're going to start off with Ray. Okay, I'm going to make note of Ray's gross income, and that was listed as 45,000, and his friend made 12,900. Okay, we're going to start off there with gross income. Now, the first thing that you can deduct is above the line deductions, and there's a whole list of things that could be deducted this way. Ray has none of them though in his situation. However, his friend does have something that could be deducted above the line. And in this case, it's the interest that was paid on his student loan. Okay, so that interest could be deducted. That lowers the gross income by $850. Okay, like I said, Ray has none of that, so he is subtracting zero. So he is left with an AGI, which is an adjusted gross income of 45,000. And for his friend, the AGI is $12,050. The next thing that you can do is a below the line deduction. Okay, and you've got two options. You could do a standard deduction or you could do an itemized deduction. Now, the reason why we have to make note of the AGI is because that is used for other tax purposes that I'm not going to get into right now. So the next step would just be to take the next deduction. So that could be a standard one or an itemized. Now, an itemized mean you add up all these different things that could be itemized on your taxes. There are all these different things that count as deductions. And two of those, Ray has right here. They're the property taxes that he paid for owning his home, and also the interest that was paid on his mortgage. So if he takes 6,100 and adds that to 7,200, he's going to get 13,300. Now, the standard deduction, okay, is just a given amount. It could change from time to time. That's going to be 12,400. Now, because all the things that Ray itemized was greater than the standard deduction of 12,400, he's going to want to go with an itemized deduction. So he's going to subtract 13,300. And that's going to give him his taxable income. In his friend's situation, he doesn't have any of that, so he's just going to take the standard deduction. That's 12,400. All right, now when you do the subtraction for Ray, he is left with taxable income of $31,700. In his friend's situation, it ends up being a negative 350. So he has zero income that could be taxed. All right, because he was basically ends up with zero taxable income. All right. Now, let's just say that the taxes were calculated for Ray. All right, he could have been taxed on 31,700. The taxes that he ended up owing was $3,715. Okay, that's what he owed in taxes. Well, now he'd get credited. Now, if you have a child, the child tax credit as of now is $2,000. Okay, so he could take away $2,000 for having a child. So now what he owes in taxes would be $1,715. Now, the nice thing about his employer is that his employer has been withholding money throughout the year for Ray to use towards his taxes. So the employer had withheld the 3,900. Okay. So now when you do that subtraction, you take that away, because remember, he owes $1,715, but his employer already held out $3,900. So the difference of that is going to be a negative 1,715. So actually, he will get that back as a refund. $1,715 as a refund. And that's because his employer was withholding money so that he could use that to pay. But with Ray's tax credits and the deductions and whatnot, he was able to adjust it so that he ended up with a refund. Now, in his friend's situation, his friend ended up owing zero taxes because his income was less than the standard deduction. So he was with zero taxes. He didn't have any tax credits, so he ended up owing no taxes. However, his job withheld $1,290 from his paychecks. So technically, if you were subtracting that from zero taxes he owed, take that away, or take away 1,290, he's left with that much money for his refund. So 1,290, that ends up being the refund for Ray's friend.